Hi, here we are with our next unit of CIA Part 1 lectures. And today's unit is about controls and its types and framework. There are basically two units in the GLIM course content for the CIA Part 1 exam. One is about control frameworks, and the other one is how we apply the controls application. Here is a brief intro about myself, my career trajectory, and my qualification. If you are interested, you can pause the video and you can read it. I will move to the next slide to cover the course content of this unit. So let's move to the next slide. So here we are with the overview of what we have covered so far and on about what we will cover in our today's session. So far, out of 7, we have covered 4 units of GLIM CIA course material. Today we will be discussing about the Unit 5. The Unit 5 basically comprises of about 10% of the entire syllabus, and approximately 13 MCQs come from this section. However, the control unit basically split into Unit 5 and Unit 6. The Unit 5 is about the types and the frameworks, internal control frameworks, and Unit 6 is about how to apply internal controls in your day-to-day auditing activities, so the application part. And lastly, in the Unit 7, we will be discussing about fraud risk and controls. Just to have a quick overview of what we have covered in each unit broadly. In Unit 1, Foundation of Internal Audit, we have covered about the IPPF framework, which has 2 sections, mandatory and recommended section, and the standards and definition, the code of ethics and principles and ethics falls in the mandatory section, and the supplemented or recommended guides and guidance falls in the recommended section. Then we in the second unit we discuss about independence, objectivity, proficiency, due professional care, and quality and improvement program. So these were some of the key terminologies or concepts which are very fundamental for the internal audit. We talk about what is the difference between these terminologies and concepts, and how we can apply those concepts in our day-to-day audit activities. Going forward in the governance, we covered what is corporate governance, and we also covered corporate social responsibility. So these were the 2 key elements in the Unit 3. In Unit 4, in risk management, we talk about the risk management process, and we covered risk management framework. Broadly speaking, we covered 2 main one, which is ISO 31000 and COSO ERM framework. We slight bit we touch upon on Turnbull as well. And in today's discussion, we will be talking about the controls and their types and framework in our today's session. This is the graphical presentation of the entire unit. Basically, it talks about overview of the control, what is control, the definition, the control process. Then types of controls, we will just quickly go through what are the key types of controls. And lastly, in this unit, we will be talking about control framework. If you remember in the last, in risk management unit, we talk about 2 frameworks, mainly COSO and ISO 31000. Here, from the control perspective, again we will touch base upon the COSO, but COSO integrated control framework. So the framework on the control side. So there we covered at the risk side, and now here we will be discussing about the control element of COSO. Apart from that, we will be talking about Cobit in relatively some detail. So it's a IT governance framework that we will be talking about, and then we will be quickly getting touch base with some of the other concepts or control frameworks based on either geography used popularly in certain countries, or which are being famously used in the business fraternity. So this is how we will be going through the entire syllabus. Let's begin with this session with our with some of our definitions on control. Um, Definition of the control by the IIA is basically the management and the board actions that they have taken to ensure that the risks are being managed properly and the organizational objectives will be achieved, and the likelihood of achieving those objectives will be maximized. So this is the key definition in simple words by the IIA. And the IIA also defined the control environment, which says that the management attitude and the action regarding the importance of controls within the organization basically cultivate that what is the control environment within the organization. It talks about the integrity and the ethical value, management philosophy, management style, organizational structure, authority and responsibility, and HR practices. So basically, all the soft key control part become the part of the ethical culture, and within that ethical culture, everyone is conscious about their actions and their behavior, and as a result, they take care of how to achieve the organizational objectives or within their own domain, whatever their job responsibilities are, and how they ensure to achieve their responsibility while managing the risk in a most efficient manner and deploying the controls. So controls are basically the tools to enable an individual to manage the risk in order to achieve the objectives. So this is the brief explanation of control environment. Then comes to the control processes. So control processes is nothing, basically it's about the entire key small components which we have within the organization, be it part of the policies and procedures, the structure within the organization, the hardcore and the soft controls. Hardcore could be the system related controls. There are certain checklists we have to perform or signatures we have to perform. So this is all part of the hard controls. And soft control is where you promote within the organization ethical behavior, where you ensure that the people are conscious of, morally conscious of when they are doing their day-to-day activities. The process, how the formal process take place in terms of control, we basically initially set the standards or we set the rules that how to carry out any activity, and then we assess the ongoing process with that rule or that standard and see what are the deviation and why these deviations are happening at the first place. Is it because of lack of responsibility or lack of awareness within the individual who are being assigned those tasks, or is it because the standards were wrongly set? So to recognize what is the core issue and then take the appropriate action in order to address the issue, be it in terms of allowing the individuals to be more cautious or to reassessing the standards. And so this entire process in itself is the control process. Control limitation would be basically the human element predominantly, because human beings can make mistakes. Human beings can override the controls, system controls. I personally have witnessed in a lot of organizations that the system have a lot of good controls, but the employees, they override the controls or they collude. For example, if a person who review and who approve both agree on to approving certain voucher which is not supposed to be approved, then the controls could be circumvented or can be defeated, so in that case the human element is a major concern, and the cost and benefit analysis also is very important. That the importance of control is good to have, but not to the extent that it overruns the cost overruns the benefit of securing or safeguarding certain element within the process. You want to hire a watchman, but not to hire a very expensive watchman, even beyond the price of that valuable for which you need that security, right? So in that case, we have to carry out the cost benefit analysis, and sometimes subjectivity involved that is it more costly or not. So that subjectivity may also be a reason for the limitation, that maybe everyone thinks differently. Some people are risk takers, some people are risk averse. So in that case, the controls which they define or dictate within their philosophy of management will be completely different. So these are some of the limitation in control. Here we have some small definition, some role and responsibilities and individuals who are responsible for control. Basically, in this slide we will be talking. In terms of internal audit, basically we evaluate the controls, whether it is designed effectively and it is functioning effectively. This is our role to provide assurance, and if there is either the controls are being not deployed throughout that period, then we raise those concerns, or if the controls are not defined effectively or designed effectively, then those concerns we also raise, and the management take action to overcome any deficiencies in the control environment. Senior management are play a very crucial role in controls, in overseeing administration and assessments of controls. They are basically the one who are core team who are responsible to establish and to ensure the proper functioning of the controls. Manager are also responsible. They are responsible for their area of responsibility, that to ensure that the controls are working effectively, and if there is any improvement required, they also highlight. Continuous improvement, this is a concept that we internal audit always recommend, that the control should not be a static one-time activity. It evolves, and we have to keep on changing the controls as and when required. Maybe there is a change in legislation or a technology or integration of a technology, or change in the business plan, business model. So all this necessitate that there should be a continuous process where we keep on evaluating the controls, and to ensure that whether we are achieving the desired objective from these controls or not. And the controls, as to mind you, that it is one of the crucial tool to ensure that the risks are managed properly in order for the companies to achieve their objectives. There are different ways by which we can classify controls, be it primary or secondary classification, or it hard or soft classification of controls, or as we can see here, automated and manual. So in this slide, we will be more focusing on the classification in terms of automated controls versus manual controls. Or you can say automated versus human intervened controls. So that classification could also be appropriate. So manual controls are good where we have a unique situations where we cannot have a repetitive nature of activity, or where there are exceptions. So in that case, it is important that there is a human who is involved, and he take a right appropriate action based on his best available information and judgment. So their automated controls might not work. Why? Because automated controls are basically rule-based, so we define logics within the system, and the system in itself work based on those logics or criteria, and they measure the activity based on those criteria and do the task as intended. So in that case, manual controls are better if these are unique situations, but if it is similar and we have more uniformity in the activity, then automated control could better work. Automated controls are also good for high volume predictability and high degree of accuracy, obviously, because the systems, you define the logics, and once you define, the system works on those logics. Transaction trail is something which we can have it very easily in the automated system, where we can look at let's take an example of a payment. The procurement officer, he made the final payment, or the finance section made the final payment. So if you want to check whether there was a purchase order, inventory report, purchase requisition, so these all documents, if we want to review, it is easy in the systems. By a click, we can see how many approvals, was there all the approvals being taken or not, because the system in itself, it controls the entire activity through different logics, right, through different controls. So you can have it from a one click, but in the manual one, you have to look all the papers, you have to visit the people, you might have to ask. So in that, it might be a little bit cumbersome. So transaction trails are easy and good at, and it's much recommended and much transparent in the automated environment. Whereas in the manual, it is a little bit hectic. Uniformity, when we have more uniformity in terms of any activity or transaction, we can better automate, because automatic controls work there very efficiently and effectively. Segregation of duties, again, in ID control, we can easily define different level of authorities. So segregation of duties could be a good way which can easily be implemented in the ID control environment. We can also have compensatory controls on the top of the existing controls, or we can have other secondary controls in the automated environment much easily than the manual one. Potential for error and fraud, it is the automated controls are always recommended because there is less potential for error and fraud. However, the cyber attacks, system penetration, unauthorized access could be the domain where we have to put more emphasis when we talk about the automated control. Increased management supervision, we can use different IT tools just to see not only the sample transaction but the entire transaction, and we can identify anomalies and all. So automatic controls are very good at this aspect as well. There are so many computer generated initiated transactions that happen within the companies or organization, where, let's say, if the stock level go down a certain level, automatic purchase order is issued to the supplier for the requisition of the stocks. If the finance department petty cash is below certain impress amount, then automatically a transaction could trigger and to the line manager or to someone there to top up. So this kind of controls can be placed within the control, where the system monitors 24/7 all the activities, which could be difficult in the manual setup because someone has to keep on reviewing all these transactions in their level. Computer input and output and manual use. So basically what happened that in the computer, in the automated system, if you did not define the logic correctly, then there could be a problem, as we say, the garbage in, garbage out. So I was auditing one time a company, and where I just do the basic audit, apply the basic audit procedure of reperformance. So I took the assets, calculated a sample manually, the depreciation of those assets, and I came to know that it differs from the system numbers. I went to the chief accountant, and later on we discovered that the logics which were defined, or the rules which were defined in the system, was wrongly defined, or there was some error or misstatement, due to which the depreciation calculation was wrongly being calculated by the system, and it was happening for a very long time. So that is where there is a need for more being vigilant about when we are putting or placing system controls. So these are some of the attributes and differentiation between automated and manual control. There are certain other classification of controls which we will be discussing in the upcoming slides. So let's begin with the different types of controls. Controls could be defined into different groups or categories through different angle and perspective. In the previous slide, we talked about manual and automated control and the characteristic of both. Here we will talk about primary and secondary and some other classification of controls. In the primary controls, basically these are the primary one as goes with the name, and there are 4 types: preventive, detective, corrective, and directive. Preventive control is when we place a control to ensure that a negative event doesn't happen. For example, we install a fire alarm, we place a lock on the door, we put password in our computer just that no unauthorized person access. So these are different types of preventive control. Detective control is when the event happened, then we ensure that everything happened as per the standards or as per the desired intent. Example could be that we carry out a bank reconciliation to ensure that all the money is properly dealt with and there is proper in and out of the cash. The another example could be when we carry out a variance analysis, when we ensure that why there is a deviation, and to ensure that there is no deviation, we carried out an analysis. Corrective control is when the event happened and we are exposed to the risk. So now what happened, we try to go back and to review that situation and to understand that what caused that event and was there any control and why there was a control failure or there was an absence of control, and we try to ensure or to place a control there. So that is called corrective control. Directive control are basically the way by which we enable the individual to behave in certain way in order to ensure to be in compliance with the standards or the desired action. Some of the example of directive control are policies and procedures, job training, and job descriptions. So these are the way of directive control. Secondary controls are basically a classification which assist or complement the primary control. So we have compensatory control, which are basically what if the primary control fails, then we have a second layer of control. One of the good example or very easy example would be your cell phone. So whenever your thumb impression doesn't work, it asks for a pin, right? So this is a compensatory control. So if one control doesn't work, you can have another control. Complementary controls could be when you place one control over another just to complement the control. It could be that one of the example I would share, for example, I went for a bank auditing, and there I went, and the ATM machine basically have its own controls in terms of proper how much amount we put in there, how much withdrawals has been happened. So everything is automatically controlled. But at the day end, I observe, and this is one of the audit procedures, that the bank personnel, they also ensure that they reconcile all the amounts in and out of the ATM machine. And so this is an additional control they perform despite there is a system control. So this type of controls are called complementary control. Control could be placed at the entity level, at the top organizational level, process level, or transaction level. Entity level controls could be through having a proper established organizational structure. In the structure, we can have a board, and we can have audit committees. So this is all part of the entity level. We can have a business plan. so no one deviate from what they are supposed to achieve. We can have business philosophies, ethical values. So this is all part of the entity level controls. Process level controls could be where we ensure that within a process, for example, hiring process or procurement process or production process, that there are controls within that process. Transaction level, when we look at one activity of that process. So we have a procurement process, but when you make one single purchase, what are the controls while making a single purchase or single procurement order? So this is called a transaction level control. Then the other way of looking at control is from time perspective. Feedback controls could be learning from the past mistake. Concurrent controls could be reviewing ongoing activity, monitoring real time. So this could be a way of looking at the controls. And feed forward control could be, as we have said, directive control could be anticipating an issue and trying to place certain direction, or in order to guide and govern the behavior of the people through SOPs or guidelines or through regulations or job description and training. Another classification could be through financial and operational controls. Financial controls, as it goes with the name, it basically focuses on the finance, on the money part of the company, or finance part of the company. It revolves around the accounting principles, proper authorization, recording, bookkeeping, safeguarding of the assets, and they take into account of the laws and regulation and the standards. Operational controls could be through what are the operational activities happening within the organization. Could it be through production line? It could be any other operational, fleet management. It could be people management. It could be. So this is all part of the any controls which are placed in those areas of the business are called operational. Anything other than financial could be classified under operational. So this is a few example how we can classify in controls. So you should be aware of broadly that what are the controls and how you can classify controls into different categories. Some other ways by which you can classify controls are people or system-based control, as we have discussed earlier. Manual and automated could be the same criteria. We can use it. In system controls, we have general controls, and then we have application controls. The general controls are logical access when you try to access your computer or an application. What are the basic logical passwords and all. System development related controls, change management. If you want to change something, what are the key criteria do you have to fulfill? Security controls and backups. So these are part of the general controls. Application controls pertains to when you are using an app and the controls which are defined within the app. For example, input controls. There are certain fields where you cannot put an alphabet. They only ask you to put the numbers, for example, telephone number. And there might be a restricted number of characters that you can put. Or for example, so these are all types of input controls. Processing controls could be where when you are using this app, that no two people can change the data at the same time. There could be another way, like another control could be that any changes made by the person will be recorded by its identity. So any changes which are being made. So this is types of processing control. Output control could be through totals, that whether the total is correctly coming or not, whether there is a zero balance in the accounts or not, sequence check, range check. So there are different types of controls. Integrity control, where we ensure that the information which we have stored is the output basically is correct and stored in a very secure manner. So this is called integrity check or integrity control. Management trails are very important in terms of controls, which means that we track the output with the source document, or we take the source document and we reach out to the final outcome. So this is also one of the very important way in the application control. For example, for a payment you go to the source document requisition, and from a requisition you can go to the payment, vice versa. So this is called transaction trail or management trail. So these are different types of controls that you can classify under different categories. Here is the example of some of the other key control frameworks which we can classify, not the controls, but the control framework in terms of different geography. So in different part of the world, there are different frameworks that are being used. Control frameworks are used within the corporate or official setup. In the US, we have mainly two, but there are others as well. But the two prominent one is the FCPA Act and the COSO Framework. FCPA is basically a Foreign Corrupt Practices Act, which means that what happened that in the US that the government officials were being accused of taking corruption, accused of taking bribe and doing wrong acts, and they were involved in giving and taking bribes to the government official of different countries in order to fulfill their agendas. So the government, to ensure that all the foreign diplomats or the foreign officials should not take or receive any official or officially or unofficially bribe or any kickbacks or anything, they put in place this act. And act means that it is being legislated and it is a law now. It doesn't stop you from taking anything, but there are different guidelines that you have to follow. So in order to ensure that no corruption take place or no bribery take place. In the corporate sector, the most common framework from the US geography is COSO. So COSO is basically a recommendation guideline for the control frameworks, which are given by 5 professional bodies when they sat together and they come up with these guidelines. We call it COSO Internal Control Integrated Framework. Then in Canada, we have a CoCo model, which is criteria of control, and which is being sponsored by the Canadian Institute of Chartered Accountants. In the UK, we have Combined Code, and if I'm not wrong, it has now changed to Corporate Governance Code of UK, if I'm not wrong. Maybe I'm wrong, but I do not have the latest update. But Combined Code was basically a corporate governance framework also, which states about that how the board has to be composed of how many executive and non-executive directors should be, the audit committee, there should be audit committees, internal audit and external audit should be carried out by the company, there should be controls on the financial reporting side, so what should be the compensation and how it can be determined of the executive management. So these were all the guidelines which were part of the UK Combined Code. And obviously these guidelines are basically tools to enable the organization to manage its risk, internal adverse risk or external risk, and in order for them to achieve the organizational objective. There are multiple control frameworks, but one of the few which are being extensively covered in the IIA course is COSO Framework. If you remember, in the previous sessions, we discussed about COSO ERM framework, and today we will be talking about COSO Integrated Controls Integrated Framework. It defines the control definition. What is internal control? It basically the action taken by the management and the board in order to ensure that the risks are managed effectively and provide reasonable assurance on the achievement of organizational objectives in terms of operations, reporting, and compliance, that all these activities are being managed properly. What are the COSO controls objectives? You can remember these objectives by acronym OCR, which means or ORC, whichever order you use. O refer to operations, C refers to compliance, and R refers to reporting. That we have to ensure that we have enough controls where we achieve our financial performance or financial objectives. We drive our productivity, quality, we ensure innovation and customer satisfaction. So these are the elements where we have to have strong controls. In terms of compliance, our controls should adhere to all the laws, regulation, policies, guidelines. In terms of reporting, our controls should enable us to receive or to transmit the information in a timely manner, in a secure manner, and it has to be in a transparently being provided all the information and on a timely basis and concise, obviously. COSO, component for internal controls, can be remembered through the acronym as CRIME, which means that what are the key component of internal controls. So control activities are like what are the key controls which are defined within any transactions or an activity. So those controls could be defined. Then we have to carry out the risk assessment that these controls are effective enough to manage those risks. Information and communication is one of the key elements of the good control framework, that it is being timely provided. Monitoring and the control environment. So monitoring means that we have to ongoing keep on ensuring that all the controls are effectively working, the risks are being managed properly, and as the environment change, we change our controls and we monitor our risk as well, because demographic risk could also change over the period of time. And control environment overall means that the organization have a tone from the top and the organization structured in a more efficient manner. They have policies and procedures, people are aware, trainings are being provided, job description is there. So this is all part of the control environment. This is the graphical presentation of COSO control framework. Here you can see that all the key element of the control, the component of the internal control, control environment, risk control activities, information and communication, and monitoring activities are defined. And it reflects that these all activity are performed to achieve the control objectives, which are operations, reporting, and compliance. That these three areas are effectively working, and we are ensuring all the risks are being managed. And this happen across the organization. So you can see the third side of the cube that where it says entity level, divisional, operational, and functional, means these controls are being integrated and flow within the organization from top to bottom and bottom to up. So this is a very beautiful diagram which shows what we have discussed in the earlier slide. Again, here just to quickly go through what is control environment. So in control environment is basically the overall behavior and the action taken by the top management in regards to the control environment. Be it in terms of composition of the board, establishing of the different committees to focus on certain area of the businesses by the board members, reporting line, to establish reporting line, to establish role and responsibility, to review their performance, to set benchmark standards in terms of policies and procedures, KPIs, KRIs, and to assess whether individuals are complying with those standards or not. So this is all part of the control environment. Risk assessment, when we talk about the risk assessment, which we also covered in the last sessions, risk assessment has a process in which we identify the risk, we assess the risk, we try to manage the risk, we prioritize the risk. So this whole activity of risk management encompasses, and this is also one of the key elements of the control environment. Control activities are basically how we manage those risks through automated controls, through manual controls, through compensatory controls, through detective controls. There are different ways how you can manage those risks. Lastly, the information and communication. It is about that how effectively and timely and in the best possible manner we are circulating the information or receiving the information or synthesizing or processing that information flow within the organization like a blood. So if you have a good control over the information, there is less likelihood that any adverse event can happen, because if there's a good culture within the organization and the bad news flows faster than the good news, so the action will be prompt, right? So it's similar to the human body, that if the blood circulation is smooth, there is the body is more strong to take to resist against any adverse internal or external virus. But if there is a problem in the circulation and the blood doesn't circulate to the valves, to the heart, then even angina attack can happen, right? Similar to that, within the organization, information plays a very vital role. Monitoring activities is basically that we have to keep on monitoring the controls, the risks, the overall structure within the organization. This is very much important because now we are working these days in a very dynamic organization. Everything is linked to another thing. The companies are affected by their competitors, by their political interference. There is a lot of factors that affect the organization, so therefore we have to keep on monitoring. So this is overall and a key summary of what constitute the COSO control framework. Here we are with another control framework, and especially this framework is related to IT. It is very well known by the name of Cobit Framework, and the institute which has developed this framework is the ISACA, again a very big and reputed organization, which stands for Information System Audit and Control Association. Cobit, which means that control objective for information related technology, is basically one of the framework which is used for managing all the IT activities. This is most commonly used and most famous one because it is very flexible. It can you can embed some certain other IT framework within this framework in order to ensure that there is proper governance in terms of IT. Every organization has IT systems, and even as an individual these days we cannot expect ourselves without being part of the IT digital revolution. So how come an organization can be? They have ERP system, they have different apps in use, they have different machineries which are using IT. The information flows within the organization through IT channels. Therefore, it is very important that whenever we talk about control frameworks and control governance, we talk about IT as a very specific topic. So the Cobit framework has 5 principles, which is meeting the stakeholder needs. This is the one of the key principle. Covering the enterprise end to end, which means because the information flows end to end, so covering the organization end to end. Applying a single integrated framework because you can integrate other IT frameworks as well within the Cobit. Enabling holistic approach to be more realistic, and separating governance from management. So it clearly defines what are the governing part of the controls and who are responsible to manage those daily control activities. As we have said that it is a single integrated framework, which means that there are certain other frameworks which can be used while using a Cobit. So it is very much used in the US, where we have a strict SOX compliance, that they use Cobit as a framework to ensure that the SOX compliant, that the companies are SOX compliant. So they integrate SOX compliance with the Cobit. In the SOX is basically financial control framework, and financial control, when we talk about, we use systems, ERP systems, so we ensure that we have a robust IT control framework within in place in order to ensure the integrity of financial data as well. Just to have a quick understanding of what is the difference between Cobit 5, which was the old version, and Cobit 2019, which is the new version. So there are many differences, but we will just stick to a few high level one, the most significant one, and why there was a need, first of all, to have a revised version. The previous one was considered to be less flexible, so this one is more flexible and more generic, so more tools or more frameworks can be used parallel to this one. The Cobit 5 expands Cobit 4, so which means that there was even an older version, and even in from Cobit 4 transitioning to Cobit 5, the standards, ISO standards and ITIL standards were being incorporated. The 2019 is too generic, now comprehensive and flexible enough for any organization of any size to use a Cobit framework. One of the key principal change in Cobit 5 versus Cobit 2019 is the 5 principles has been expanded to 6 now. So now there is one more, which is tailored to enterprise needs. This is one additional governance principle which has been incorporated in 2019. Another key element that has been taken into account in Cobit 2019 was to increase there are governance and management objectives. When you look at the governance, the Cobit framework, they have defined that what are the objectives from the governance aspect that you have to assure from the IT activities, and what are the management related activities which are more related to process level objectives that you have to achieve in terms of governance. So it has been increased from 37 to 40. So previously also there was these governance and management framework, but in the new one it has increased, and it is being organized into 5 domains, so which is reflected in the below picture. You don't need to have an expertise on all and how to apply for the CIA exam. You just need to have basic understanding of Cobit 5 and the revised version in Cobit 2019. The third key element and the difference between Cobit 5 transitioning to 2019 is the capability model. Basically, it's a generic model which is being used for ensuring that which level of maturity a certain processes is in right now. So if we want to assess that, if we want to rate 1 to 5, and 5 being the best level, so you can ascertain that which level your current IT processes are at the governance from the governance perspective. So in Cobit 5, it was the old version of capability model, and now in Cobit 2019 they have the latest version, and the latest version is more explanatory, and it defines all the key elements and stages by which you can assess your IT maturity of a certain aspect of the IT or the entire IT through this model, capability maturity model, by using their latest version of capability maturity model in the 2019. Here we are with some other IT control frameworks. These are also some of the frameworks which you can look into it, and it might be used in certain entities in certain part of the world, or maybe within same geography people might use different IT control governance framework. The CoCo framework, basically it's a Canadian based model which is being devised by the Institute of Chartered Accountant of Canada, if I'm not wrong, and it is more usable if you want to look the controls from the internal auditing purpose. So it helps you to audit, and it enables you, and it give you that guidelines. It has 4 component: purpose, commitment, capacity, and monitoring and learning, with the 20 criteria against which you can assess the current IT system and ensure if there is a need for more enhanced control in the IT system. VLIT or VAL-IT, it's another framework. This framework is used when you want to assess the investment in IT setup, because investment in IT, ERP, in the ERP system or any technological tool or app, how to assess whether we derive the value from that, from the governance perspective, from the control perspective. So you can use this model, and you can use this control framework to assess that, and to ensure that within the organization we have a good control environment whenever it comes to IT investments. It also complements with the Cobit, so you can fit in this the key elements of this in the overall framework, overall Cobit framework. Then comes GAIT. It is very much used when we talk about general IT controls. It's a risk-based approach, and it has 4 principles, and it revolves around the risk. This is overall the purpose of it. It talks about the IT functionality, the application control, network and operational controls, coding, and this is what it comprises of in terms of general controls. So overall, you can use for IT as an overall Cobit. You can use, if you want to focus the controls from the auditing perspective, you can use CoCo model. If you want to assess from the investment side of IT, then you can use IT. If you want to look into generic controls, then you can use GAIT control framework. Here we have some additional control framework as well. ESAC is recommended by the IIA, and it enables the people who are in charge of the governance, be the board or internal auditor, to help them understand, monitor, and assess, mitigate the technological risks. So this framework is good from that perspective. There is an emphasis in this unit on the soft control, that not all hard controls are the only way to go and to secure the organization. We need to have a soft controls as well, and COSO and CoCo model mostly focus on this on the soft element of control as well. What are soft controls? Basically, these are inherent control attributes within the organization, the tone at the top that the management put that consciousness within the people through systems, through trainings, through structure within the organization, that they should be mindful of what they are doing. They should be vigilant enough to manage all the risk within their area of responsibility. They should voice their words where there is a need for. So this is overall how we classify a control environment. One of the methodology that is more specific to the control soft controls is CSA framework, control self-assessment. So we can use that framework in order to enable the end user, the person who is in charge of day-to-day activity, to tell us what are the controls that is need to be implemented, to change, or to remove, in order to make the process more efficient, more resilient, more strong within the company. So CSA control self-assessment is the framework which we can use to assess the soft control as well as the hard control within any setup within any organization. This is the end of the presentation, and thank you very much for your patience and watching the entire session. I personally took quite a lot of time in making this presentation, because I have to summarize the entire unit, which has so much of information, to put it in a manner that without even losing any key critical concept, we cover in the shortest possible time the entire unit. So I hope this effort bears some fruit, and it helps you understanding the entire concepts in your preparation of the IIE exam. And if you benefited from, please do not hesitate to share with other people, subscribe to the channel, and do let me know in the comment section that if there is any need or if there is any improvement that I can bring, or if you just benefited from, just let me know, because it will give me motivation to continue this series, and for the benefit of masses. So this is all. Thank you for watching, and hope to see you in the next video.